Actually, it should be good morning, good afternoon, good evening, depending on where you are in the world. All right. So for today, so you can see where equity markets are at the current moment, and so you can see on the first bullet where we have market prices move on expectations and not reality. So you can't wait for everything to be picture perfect, just like waiting for a perfect confirmation on a trade. Yeah, you got to go in when things are starting to turn a bit. And basically, that started with that whole, whole acceptance by the Feds to be responsible for funding basically globally, not just home, but globally everywhere. And that's why you can see that riskier assets have stabilized in general. All right. Also, you can see bank earnings today. JP Morgan did come out, and it's already expected. They had a fall of 69%, but their trading revenue surged. So all in all, markets are still holding up with all of this news going on. Wells Fargo coming out next, but you can see that it's mainly expected with what's going to happen. No one really knows the scope of the this whole supply chain lending. But it's been estimated into the billions of dollars globally. So in terms of their loans and all, that's the part that's holding things down right now. But like I said, everything's to be expected, and for later on in the week, it will just be about where the how bad is what the damages are. And you can see other thing that I noticed today was that equity index market correlations, they're all moving in the same direction. So I saw the bonds a little stronger, the yen a bit stronger, and the equity markets moving higher. So I would imagine that can't stay the course for the whole time. So we're going to have to see which one's going to kind of buckle first. But right now, this morning, coming into today, that is what I'm seeing. So we've lost a bit of inverse correlations coming into early this morning, telling me to be a little bit more cautious just because of that reason. Okay. All right, let us move on. Support is with me today too, as well as normal. And just so you know, he is also a pure Sam Seiden supply and demand trader as well. So feel free to go ahead and ask questions. He will answer. All right, let's move on. So this one I thought to bring up. I know we missed our session yesterday, but I thought to bring up just for a bit of a lesson. And you know what? This too also brought me into some thinking. But let's go through this first. So this was just a little 5-minute area inside of the S&P. Typically, you can see that we don't like these zones because of all the trading to the left. But given where it was in the overall curve after it had come off of our 4-hour supply zone, and there was a decent profit zone, I took it anyway. Now, yesterday I did have internet issues because of the weather, and it brought me back to a time when, right before they started having cell phones. And I remember they always say, oh, write down your broker's number just in case something goes wrong. However, they didn't have cell phones, but they did have your phone that you can buy in a bundle to connect to your internet. So, of course, when the internet goes down, the phone goes down. So I kind of remember that time because I didn't have the whole trade in there, and I had 15 contracts on. And I was like, okay, what do I do at this moment? So I just sat there patiently waiting 15 minutes or so, and before it started to come back. And yeah, it wasn't pretty, but of course, yeah, it made it up within the next day or two. But the whole point was it brought yesterday kind of brought me back to that. But of course, I got in the whole stop, target, and everything in. But it was just some things trigger certain memories, and that one yesterday did trigger that. But anyway, I wanted to go over that just as a lesson overall. Some of you might have taken it, but some of you might say, well, it is an overnight zone, and not all overnight zones we want to take, but just thought I'd share that with you. All right, we can go into the charts, I believe. Let's go into the charts. Okay, so let us start with this S&P. You can see that we are still sitting in this 4-hour area. So far, what you have seen is that prices have moved up into the 4-hour zone, dropped back down into some demand and rallied back up. So you can see we've just been holding each demand as well. This can also be a demand again, but you can see it won't be your first time back into it. And we are sitting right back up at this area. Up higher, you can see we have a retested zone, but I'll go show you the 60-minute. So 60-minute above current price, you have two levels on top of each other. That's coming in at the 30.002 to the 30.0031, and then the 30.34 to the 30.81. And like I said, these days you have micros, so if any areas are too big, you can either do it in micros or you can break it up into two sections. But typically, if there are two on top of each other, you like to take both of the areas. At least your stop has to go above the upper zone. Below, you also can see on the 60-minute, we have 25.97 to 25.85. And in terms of freshness, that I see is the fresher demand zone. But of course, we'll go take a look at what's a little bit closer. But right now, those are the fresh areas above and below. All right, so you can see this was yesterday's high, which really came in at that 28.1950, which is right inside of our 4-hour supply zone. Anybody try any shorts in any of those areas, whether it be the 4-hour zone or the yesterday, if you took it in the smaller time frame, if you were looking at it? Now, this area down below, you can see all the equities markets has this zone on the 10-minute. So this one is coming in 27.70, 27.65. I won't be taking this type of area, but I pointed out to you because it is a demand zone that is below current price at the moment. And the reason why it's a lower quality is because it is an overnight zone. You can see where the overnight low is, and this is above the overnight low, right? It's above the overnight low. It's above yesterday's low. So it's basically in the middle of this range, right? Because we have this range from the yesterday's high to yesterday's low. And then we have the overnight high, overnight low inside of it. And now this area is right inside of it too as well. Okay, excellent. Yeah, so some of you did. All right, nice. Okay, so that's on the S&P. Now, when we move to the SPY, so you can see on the SPY a little bit closer, right? So this area points more to that area down below in the S&P on that 30-60 minute. So you can see this is the 260.27, 257.94. This also looks like a fresh area of demand if prices were to come back down here. I don't believe we're over. Let me just see where we're at. Yeah, we're pretty much sitting back up at the highs with the SPY right now. So you can see right where prices are trading at the current moment. Okay. Now the Nasdaq. So let's go back to. Actually, you know what this was the funny part. So I was going to go to the Nasdaq, and Nasdaq's the strongest market. If you can see through all of these four markets right now, you can see Nasdaq's the strongest one. Couple of stocks I'll take you to that too as well, where we have seen Netflix yesterday. You can see that move, creating that extra strength inside the Nasdaq. Made up a move up to 396.55, and today is still a little bit higher up into the 402s. So still very strong, creating still strength inside the Nasdaq. Also, the other one is Apple. And you can see too, we did also make a little bit of a move up, 273, and then we went up to almost 280, 279 overnight. So Nasdaq to me was still the strongest market at the current moment. If we take a look at the 4-hour, so you see on the 4-hour what we're dealing with. We are still rallying off of. So remember what we were speaking of in the beginning, where when prices were down here, nothing's clear. The world was still in an iffy position, and still is, but you can see prices have come off of the area, broke out of this zone, and then have actually created a demand zone, and have continued to move higher. And you can see really where the next fresh area is still much higher at the 90.68 to the 92.30, 92.31. Now this is the funny thing, which I don't consider as good anymore, but I was thinking, I was trying to be a little cute this morning and be like, well, I'm going to come back in a second to this, but I was going to go let me go to the DAX. So the DAX is the German market. So I was looking at it and I was like, okay, well, it started moving again now. But I was looking at it, I was like, okay, right up above current price, we have this retested zone where it fell from the gap. So we're going to come back to the gap, but then the gap is a part of this retested zone. The fresh zone, I still believe, is up at the 11,603 to 11,719. But I was looking at this as being possibly, depending on how strong it is right now before the open, I was looking at to match it up with the Nasdaq, but now it started moving again, but it was halted for a while there, because they had some problem with the Eurex, and I got a message that was halted, and I was like, well, so much for me trying to match up the Nasdaq with the DAX, because now we just lost the timing of it, because now the DAX is behind by like a half an hour. So I was like, okay, that doesn't work anymore. But you can see below current price on the DAX, we do have demand at the 10.0045 to 9990. On the 5-minute, now DAX is going to be a little bit less volatility, so just be aware if you use the, you can see if you use these smaller time frame zones, you got to give a little bit wiggle room or wait for it to pause out a little bit, because you can see it can wick out a little bit just because of the lower volume in general. But down below now you do have the 1040 458 10.431. So I bring this up because I know some of you, I don't always see the chat when I'm doing this, but my support does tell me if something needs to be addressed next time. So don't, you can definitely ask inside the chat and we can address it if I don't see it this session, next session. So going back to the Nasdaq now, and I was thinking, oh, look, we have the same thing in the Nasdaq. But now we are, like I said, half an hour behind. I don't believe it's the same anymore. Actually, it looks like it already kind of touched it, which is this area here, and which looked exactly like the DAX to me. You can see it's the gap and then a retested area from there. But now I don't believe it's, looks like it actually very slightly touched it anyway. So with that, I'm just going to stick with the higher area. There is also a 5-minute demand, which is same thing here, like what I said with the S&P on the first one. These are overnight areas. The only thing with the Nasdaq is a bit stronger than the other markets and not quite in the same range as the S&P. So you can see this 83.70, 450, 83.57. The lower area, you can see we just barely missed that area. That is coming in more at the end of the day trading, and that's coming in at 82.73 to 82.59. Okay. Now the Nikkei, you can see what the Nikkei looks like. So Nikkei was the first one to have trouble just because all of this started in Asia. It did have that nice fall back and then recovered. Today, I believe the China trade balance or so was pretty decent. Now you can see up above on the daily, still has some room if it breaks out of this area up to the 2772 to 21,374. $60-minute, it has this area that's inside of this overall range that's coming in at 18,433 to 18,190. And the 15-minute, a little bit higher. You'll probably see a little bit better on the 10. You can see that's coming in at 19,370, 19,295. Now, the only thing I would watch out for with these higher demand zones, if the S&P really has a lot of struggle getting out of this, still this 240 zone. So if the S&P still is struggling, can't break above this 240 supply zone, starts to fall back and starts to take out some demand, then I would say there's still some sort of trouble inside the markets, and we got to look out for these closer supplies that probably is going to form above these closer demands. So that's the one thing you should watch out for today as we start the trading day. Okay, let's move to the Russell. The Russell is the small caps, has been the weaker market. Just, it's usually the leader of things. So if it shows weakness first, that will be the first market. And first, let me go to the 4-hour. The 4-hour, you can see, is still a little bit higher. That's coming in at 12.99 to 13.30. And we're still rallying off of our 4-hour zone. Remember when Sam pointed out that this was a critical place for the markets that week, and you can see since that time we have not even come close to touching it again. So a very nice rally off of that area, coming up to the next zone. We have stopped right now. Let me just show you a 5-minute demand before I move there. Was it 5? Or maybe it's not on here. Okay, let me go. All right, so you can see we've come up into, so we've had these two zones from our previous sessions. Prices have rallied up into it, filled the gap, and now we've are trying to rally a little bit back up again. So these two levels on top of each other. This one coming in line more with that 4-hour zone, which you can see was right into our 60-minute zone. Right up above. It still has some room to move before it gets back up to, you can see it's the 200 and the 50 right now. Still has a little bit of room to get back up there. And you can see the same thing, has the same overall overnight 10-minute. Overnight zones are marked with the yellow circle. For those of you that need to go see the session guide, watch one of the previous sessions and you'll see. So again, like I said, all of this overnight demands are inside of yesterday's trading range and inside of today's overnight high and low. Okay, YM2 as well. So you can see we're at 23,690. We did pause. We had this area, the lower area. We did finish up into it, and then we started to rally down. We're up to 23,680, so that's coming right back up into this upper zone again. So you can see how these two kind of touch each other. It went up and touch this upper zone, and so now we are sitting just a little bit below it. So the caution with today is that we still need to get through these supplies. Everything looks strong, everything looks pretty decent, news and bullish and all, except for banks probably going to underperform overall in general. But then you can see that we still need to get through all of this with the S&P, a retested zone, YM also a retested zone, and then the Russell has also a higher zone as well. So there is still some supply to cut through in order to move higher at the moment. All right, let's move into some of the other markets. And before we do, I believe we'll talk a little bit about the dollar. So before we move into the other markets, let's talk a little bit about the dollar, and then we'll move into the other markets. So the dollar, right, you can see the dollar, it has continued to, so it's rallied off of our demand zone all the way up to an area and when we had equity markets fall. And then you can see once we start to get the Fed start to come in and started to add liquidity to the market. The main thing with all this is, people are afraid of the overall credit market, right? So that's where the fear comes in. So once that stress is relieved, then the dollar, you can see, does start to come back down. And right now, hanging on pretty tightly to pretty much close supplies as it's continued to move down. We've continued to move from our 60-minute supply zone. with it all, right now, let's take a look. Okay, so if we move a little bit lower, all right, so you'll see that the white circle is a retested zone, and then the regular box is the, let me just see. Yeah, so regular box will be more or less the open time. So this one's a little bit of a mixture here, but it's you can see most of it is during that time period. So down below, you can see this first area. We did have a pretty decent rally out of it and just barely touched. So I believe we could look at this area again below this previous low. Okay. And then the lower one, so that's coming in 97.90, 97.65. Lower one you can see is 96.85, 96.50. So the reason why we're looking at this first is because before we move into some of our other markets, now it's not going to impact gold or crude oil as much as, of course, the euro, that market. So, but it is good to look at just to give you a general idea, because if you are trying to short certain markets and the dollar is weak, it's going to be difficult to get too much of a profit. Doesn't mean you can't, but you just want to be aware that as long as the dollar weakness is going to limit your profit if you're going to try to short the market. Now, the other thing, too, that I found a little bit interesting just about the dollar in general, because remember, this all started just because this virus, drained the liquidity, threatened the supply of the credit, and then the global markets, they stepped in. So they could basically change U.S. Treasuries to swap them for U.S. dollars. So the interesting thing I found was that for the commitment of traders, they did say that we are back to, the net longs are back to the same level as back in January. So that it's kind of interesting because January, that's where everybody was long then, and now you can see prices, people have started to add it to their longs since then. So I don't see we're at the any terrific level yet, but it is interesting that people are still adding longs to it at the current moment. And so it's something to watch out for, because the main thing is if the credit markets are an issue, then yes, that will be a dollar move back to the upside. Right now, people are a little bit more calm and things look like they're moving okay. So that is not an issue at the current moment. But should it be, the dollar will definitely shoot back up to the upside. All right, with that, let us move to, this here was just to show you where this was the last rally we've had. This area we have pulled back into, we have moved out from, but you can see the lower 240 is still quite a bit lower at 96.83, 95.34. It did attempt to make another move out of there, but you can see we did go very deeply into this level. And so, a lot of the demand usually is eaten up by then. All right. Before we move in, let's take a look at just a quick look at bonds. Actually, let me move here. Okay. So bonds, you can see this has been quite a bit range bound, but to me, for this last couple of hours, they have moved back to the upside. So you can see the 10-year is struggling to break any sort of lows here. It's continuing to hold. It's still holding below this supply level, which is also yesterday's high. But to me, it's not showing us any sort of direction inside the bonds, except that they're not getting very weak, even with the stock market rally. So, like I said, I don't believe that things will just continue to stay that way. So eventually something's going to have to give in terms of one of these markets is going to have to turn down. And this has been pretty straightforward range bound. Up above you have a overnight supply 38.20 38.29 39.02. For the 30-year, same thing. This was the weaker one. You can see the 30-year. So the 30-year is weaker, has been weaker than both the 10-year and the 5-year. It went up and hit our zone up above, and you can see we have continued to fall from there. But same thing, it made a new low, but again, having trouble to create a lot of weakness with the stock market rallying. So between the stock market sitting at low supply and the bonds having trouble to not really get too weak, just a bit of a caution on too much strength in the stock market if we can't get these things to match up, because the yen too is a bit strong today too. So it's just it's not the right scenario for that perfect stock market weakness and or stock market strength and inverse weakness. We're not seeing that today. All right, so that's just a little talk about the bonds. Let's move. Okay, we'll also move into gold at the second, because we have. So with gold, the main importance with gold, you can see with the extremely low interest rates, the non-yielding gold tends to do the best, and so you can see a lot of strength coming in. Even so, we have hit an overnight high of 1785, and if we take a look at that on the monthly, we're pretty much right back up at these highs right here. Okay, so we're still going to deal with this whole area above it, but you can see this is not extremely ideal area. We've been here, this is the third time, but now if we get up a little bit higher, it's going to take us right up to this upper portion of the last high. That's coming in, wow, 2011. Okay, you can see it is rallying off a monthly demand. Okay, so that being said, you do have these overnight zones that have formed from this last drop. So again, a little lower quality just because of its being overnight, not quite above all that previous high. But nonetheless, if the risk is low, there's micros if you want to do it as well. So if if you don't want to risk too much, or if you want to wait for prices to make a new high and then look for other things, that's your choice too. But you can see right here we have two zones on top of each other, starting at the 1775.70. that goes all the way up to the 1781.30. Right now it's formed an overnight low at 1756. Since this market is still pretty strong for opposing areas, I would not look beyond this at the current moment, just because of how the market is fairly strong and the dollar is weak. So you can see we have this 17,640. That was the previous close, and the 1756. Some profits before that would be also nice. Down below this area on the 5-minute, we have some demand coming in at the 1741.20 to 1738. Okay. All right, let's move to crude. So this is the deal with crude here. So we know all the cuts that's been going on with crude. We know that it has taken, let me go back to the other chart. So we know all the cuts that's been going on with crude. We know that there's a lot of supply left around. They're looking for more cuts. I mean, yes, if the economy returns, the supplies will start to get used up. But for right now, this is the issue that's causing the problem. So you can see this first area, right? So this closer ones, you can see this first area, we took a bounce off of, went up, but still now we formed a little bit of supply here. And now we're coming into this lower zone as well, with possibly a little bit of supply too as well. So you'll probably get bounces out of these zones, just like you did this one. But you can just see that overall in general, because they don't know when exactly things are going to lighten up and how much is really left in the world that they need to use up. So it is causing still a lot of weakness, even though they had amazing deals going on. Historic deals is what I meant to say. And we've fallen pretty much 65% from the January high in crude. And you can see it's still coming off of our 4-hour zone too as well. So like I said, these areas can produce some bounces, but still a weak scenario. Let's go take a look at the... So remember this on the 120-minute, moving down to, should we get down to new lows here? So this is the area we've been coming off of, this 1933 to 1906, as you can see. Down below, you can see we have an overnight that's coming in at 1884 to 1866. Now, this lower area, the one thing I looked at, originally I had this lower area, but I noticed it was a little bit more of a pivot. So I went down to look at it a little bit further, and it is a gap that was almost filled. So if you're looking at this lower area that's coming in at 1840, I would take it all the way down to 1810, just because of the reason that you can see that this is really where this whole area is originating from, right? So this is if we start to come down to these lower zones. Right now on the 5-minute, you can see right up above, some of you might have gotten some shorts on from this closer area, which is the 2468. Now it's become a retested zone. Of course, like I said, if we start to get any sort of things are starting to ramp up and things like that. These 5-minute areas, because of how low it is on the curve, won't mean much. But you can see because of how things are moving with nobody really using a whole lot of supplies. So you can see even right up above this 2532, 2575 is still in play too as well. All right, so that's on crude. Let's move into Forex, and then we'll do a little bit of stocks and we'll move on. All right, let's see. Let's go into okay, so AD says Aussie dollar. Oh, actually, I forgot one I wanted to do. That's very, before I move into there. So this is, to me, kind of similar with how gold is in terms of the metal markets making a high and then creating some overnight supply. So you can see right up above on the 10-minute, this is copper. 23,365 to 23,430. And down below, there is an overnight demand on the 2283 to 2278. So that's on the shorter term for some, quick trading. You can see on the daily, though, the look of things is you can see where it starts to get a little bit, up at this, you have these two levels on top of each other inside of this daily 200, daily 50. And you have also a new demand here on the daily coming in at this 2200. So giving you a bigger picture look of things and then giving you a bit of a, intraday look of things. Okay, so with the Aussie, okay, so for the Aussie, you can see still some room up to its 4-hour zone that's coming up at 65.48 to 65.89. Like I said, if the dollar tries to come down to that lower demand zone, that could match up with this Aussie up to this next zone. Aussie is going to move a little bit more in lines with the stock market and with gold. So those are two things that will affect the Aussie in general. Right now, you can see we have some demand down at 62.36 to 61.97. On the 30, what I was looking at was, so you can see on the close end, we do have this 63.70, 63.55. Looks like it just missed on this pullback, along with this 63.05 to 62.86. It has hit up into this. So this looked a little bit interesting to me. You can see the 64.32 area. $64.32, $64.52, and then $64.56, $64.72. So, I try to give a little bit close area for those of you that want to do a little bit of more day trading inside of them. If there, you can see that in terms of direction, we still are forming demand. So you can see that for right now, you still have to pay attention to those nearer term demands if you're going to try to go against it. And the higher zone is still quite a bit higher. So with these, I would still pay attention to any close demands that form in terms of a profit margin until we start to see a turn in the dollar at least, or the stock market. Moving to the pound. So you can see the strength inside of the pound. You can see how this is really a retested area. That's why it's in the circle here. And you can see why. So to me, the pound, it's strong, but it's getting slower. I do notice, you can see it's a little bit slower, but it is stair stepping. So meaning it is creating a little bit demands holding, a little bit demands holding. But I'm also not seeing a massive, you can see right here where you have just a nice strong move to the upside. We are starting to level a little bit, starting to you can see that, but at the same time holding on to it. The higher zone is still going to be at these upper areas at the 130.25. So this is in the spot market, the pound dollar, 130.25. Two levels on top of each other that goes up to the 131.57. So for those of you, if you're looking at BP, you just go to the 240 chart and look for the area above the March 11th high. And right now, like I said, if we start to hold this area and fall back down, I don't think this one's going to be that strong, but you can see if we break this area, this is still going to be a pretty decent demand. So you can keep an eye out on it. It's already pulled back to this first demand and rallied off of, so this is all inside of it. So we really need to get out of this whole area. It has started to lighten up somewhat, you can see. All right, let's move to the euro. So the euro, you can see gaining some speed as the dollar losing some speed. So a couple of things I would do. So this on the 30-minute, you have two levels on top of each other. 108.39 to 108.26. Now, remember too with the euro, they're still talking about. So this is the interesting thing too, because they were saying, well, analysts and stuff, they were saying, well, if President Macron, it says that we're going to have extended lockdown, the euro should fall, right? So they're saying all this, but meanwhile, he did do an extended lockdown. He did say, okay, you're not coming out. This is going on longer, possibly end of May or June, and the euro is rallying. So you can see how sometimes you can get tricked by the news if you start listening to them too much, because the euro has continued to rally since that has happened, which is telling me that it's more the dollar where because of all this extra funding done by the Fed, that's what's causing more of the move than any other news at the current moment. And really, until that scare of whether the credit market is going to be in trouble or not because something has gone wrong, then that's when things start to move in the other direction. But right now, all this other news that's going on that they think it's going to affect this or that hasn't, and the dollar is the one that's kind of taken over everything. So you can see up above, this was the area where we were watching it to form, and you can see that it came up into it and left pretty. That's where we went to make those new lows from. So I would still look at this area because we just touched it. You can see that's coming in at 1.1088 to 1.1118. And then the other one, I don't know if anybody was willing to get in on the Swissy, but it's working out very nicely for you. So this would be the opposite of the dollar, Swiss. So if it's a long in the Swiss franc on the futures, it would have been a short on the dollar Swiss. So you can see you're getting pretty close to the opposing. If you're looking for profit, I would say it'd be right here. You always want to get out before any potential possible opposing zone, and you can see that right now we are getting back up to this overall area. So if any of you were willing to take this long or the dollar Swissy short, you can see we are nearing up to. So this was from I believe last week we had this area in. It wasn't. You can see it wasn't pretty either. You can see it didn't have a great arrival, but never broke through below the lows, and continued to move up since then with the dollar weakness. So if you knew it, there was some dollar weakness that also helped you with the dollar Swissy. All right, let's move to. Just want to look at a couple of. So remember to keep watch on your sectors for today, right? So today the big focus, of course, is going to be your financials, which is the XLF. So depending on, we already know most of them is going to report bad, but you can see even with JP Morgan, just knowing that they still are doing well just because of their trading. So, things like that, you can definitely see as we come into it, if we are going to remain green and how many of the financials will remain green. Then the other one, of course, you want to keep an eye out is the XLK. That will deter more of the Nasdaq for you and then give you some strength. So even if you have some weakness inside of the Russell or the Dow stocks, you may have some strength inside of the Nasdaq. So that's something to keep in mind too as coming into today. Now let's go and take a look at a couple of these. Let's see. So typically I don't like looking at too much supply with the stocks, but I do see on the 240, Philip Morris, a little bit up above. You can see the gap was filled, and then we have an area of supply coming in at 82.14 to 84.83. Okay, this is into PepsiCo. Now, you can see too, this is a little bit in the middle, as you can see. Nice little bounce back a little bit in the middle. But you can see we do have this slight gap down below at 124.70. To 122.47 with another level right below it at 121.86 to 120.02. And then on, going up too high. Is it MO? MO? Oh, TRIA. All right, so you can see here we have two areas here on the 240. One's a little bit closer. So same thing with all this. I would prefer to try to get out of this overall supply, just like the S&P. I would prefer to get out of this overall supply for the higher area. But you can see that's coming in at 39.31 to 38.36. And this one, you can see if we do get back down there, you do have a nice little a base and a rally. You can see it coming in 32.70 to 31.66. All right, that looks like the market. I do have one thing to say, so before any of you start to. Okay, so that covers our markets. I'll pull up my one. All right. So that is the end of today's session. So if you did like it, please be sure to push the like button down below. If you're new here and you want to see more, hit the subscribe button. Click the bell and hit the subscribe button. So this way you'll be notified every time. If you want to look at, the session guide or previous levels, you can also go to the previous sessions. But what I want to do is to keep you current on what's new and upcoming, and you can find me either on my social media, which you can see is all listed before you, and that's where I'll be posting my new venture coming soon. But if you want to get a first look at it, you can definitely email me at tradingwithjasmine@gmail.com, and I will put you on my priority list. All right, so definitely do that if you want to be on the priority list. Okay, and so it's great being with you all today, and I will see you in my next session. Have a great day and great trading, everyone.